issuing date, that is the day that the LC become available for payment. What's the time? What's the time? 4:13. If I issue an LC by 4:13 and I receive document by 4:15, I must pay. Yes. As of the time you issue the LC, you are ready for payment. Now, so when is an LC deemed issued? An LC is deemed issued when it leaves the issuer's control. Does that make sense?
Yes.
Am I making sense?
Yes.
Does FMB have corresponding bank outside the country? Where? Which country? Where? No, London. Yes. So if you issue an LC to FCMB in London, you have not issued it. Until FCMB in London advise it to the exporter. Because you can call, my guy, I beg, hold on. I want to correct that LC. As long as you can recall it, you have not issued it. An LC is deemed issued when it was? Because the issuer's control. And the issuing date, from that date of issuance, in Nigeria, it must be after for member approval. But that date is Number 2 is expiry date. Expiry date is the day that the LC ceases to exist. Who are those on that discrepancy date? You don't need, if you receive an LC after expiry, you don't need to send a message abroad. Nobody, because in your book, that LC is not even there. It's not there. I can't see it. It's invisible. Yes. So you can choose to ignore a document you receive. So if you send a message to them that has expired, it's out of course. It's cut because what they are concerned, the LC what? Please note, expiration of an LC is with respect to document presentation, not payment. Does that make sense? Yes. Expiration of an LC, that means if an LC expires today, I can still pay 3, 4, 5 months down the line. Because I incur my obligation before the expiration of the LC. So the fact that the LC has expired does not mean my payment has expired. So when you say an LC expired because you cannot present documents again. Yes. So in LC, you know about issuing bank, right? Hello, you know about issuing bank, right? You know about advising bank, right? You know about confirming bank, right? Nominated bank, claiming bank. Nominated bank is the bank that the LC is available with. That's the bank the exporter must present document to. And that bank is acting on your behalf. So if the bank receives document before expiration, if the document gets to you, if it's not discrepant, you have to pay. Unless it's discrepant, which nominated bank would have informed you. If it's not discrepant, you have to pay. Because nominated bank acting on your behalf. Now, what you said is a very important issue when you are funding an LC. If you receive an LC as a bank and the nominated bank is not you, it's a bank abroad, that's dangerous for you to fund. Because what you are saying can happen. Because if there's no nominated bank in the exporter's country and it's abroad, what if the document gets in it? So what you are saying is very important, particularly when you are funding an LC transaction. So if I'm funding an LC transaction, the LC must be available with me, or worst case, available with the bank in my country. So that document can get there before what? Expiry. What you just said now is one of the issues we had during COVID, right? COVID, we could not send documents abroad. And it became a major issue because we needed document for payment. Shipment. That is the date before which shipment must be made. Latest date of presentation. That is the date before which presentation must be made. And by default, what is the date for presentation?
Sorry, I want to.
Please, Nelson, when you are mentioning the qualified date. No, it's not a one banking day. It's not a one banking day. It's not a one banking day. Qualified day. Then it's a back one.
It must not be less than
21 calendar days. Now, latest date of presentation, 21 calendar days after shipment. Maturity date. Maturity date is only found on which type of LC? Deferred payment, tenor LC. You won't find it on side LC. Let's close. 3 principles of letter of credit. Number 1, autonomy. You know, that word is common in Nigeria when you talk about local government autonomy. Energy autonomy. Look at this chart, please. have what? The issuing bank, right? You have the export bank, right? Or advising bank. You have the importer, am I right? And you have the what? Exporter. In some cases, you have the confirming bank. Now, between the buyer and the seller is an agreement, right? Yes. Agreement number 1. For this bank to issue the LC is an agreement, right? Agreement number 2. If they are using confirming bank, it's an agreement, right? Agreement number what? 3. If this is Citibank, most likely it's in corresponding relation with this bank, Abi? It's an agreement, right? Agreement number what? 4. If this bank is funding this guy, it's an agreement. Agreement number what? 5. Then there's an LC that join everybody together. Agreement number 6. Autonomy says that under no circumstances should a default in agreement 1, agreement 2, agreement 3, agreement 4, agreement 5 affect payment under agreement 6. So no matter what happened in this transaction, under no circumstances will the issuing bank say we not pay because the good is bad, or because the guy did not pay his loan, or because that's none of our business. You see, this one is independent of every other agreement that's around it. And that's called the principle of autonomy. Go ahead, please. Someone was asking a question. That, okay. Oh, I thought I saw one hand. Are you serious? Okay, sorry. Now, autonomy. The second one. We are familiar with that one now. Bank dealing document are nothing good. Bank dealing document are nothing good. Bank dealing document. When I do training for I was undergraduate, graduate training, I was talking about it, I was talking about it. When I read several times, if you come in, wrong in the class, you know they are hearing for the like you have heard it before. But do you know the interesting thing about this rule? If you check UCP, that's 9 articles. Some articles are 5 paragraphs, some 10 paragraphs, some 2 paragraphs. This article is one single statement. Do you understand? As in, some articles have many words. This one, only one statement. You know what they're trying to do? Emphasis. So, in that rule, in that particular article 5, there's no other statement there. So that it can be very clear, and you know that because it's a very serious issue. If you have been in trade long enough, you will have had an issue with this statement. You will have had a situation in which good arrive, quality is bad, customer is saying you should not pay, but the documents are compliant. And the rule says, when you are examining documents, you examine it at 3 levels. You examine the document first against the LC terms. That's the one we do regularly. But you have to examine the document against the rule. And you have to examine the document against international standard banking practice. There are some things that you will not find on UCP. For example, if you receive an LC, and the LC has a draft, and the draft indicates that payment is 90 days from bill of lading date, and there's no bill of lading date on the draft, but there's a bill of lading date on the bill of lading. Are you aware that is discrepancy? Am I making sense, please? You receive a document under LC available by acceptance, and there's a draft on it. But the draft is supposed to have tenor, right? Maturity. And it says, maturity date, 90 days from bill of lading date, period. Of course, it's presented with a bill of lading. So they are sent to go and check. You are not supposed to check. You know why? Because that draft is a trade finance instrument. She can sell it to her at a discounted rate. So she's expecting $1 million. She sold it at $975,000 because payment is due in 6 months. Now, she's part of the transaction. She's not part of the transaction. She's a bank. She's an exporter. Will she see the bill of lading? No. So how does he know when payment is due if you don't put the date? So you say 90 days from bill of lading date, and somewhere on the draft, bill of lading date is this. You won't find that on UCP, but I think it says it's a discrepancy if it's not stated. Do you understand what I'm saying? I'm trying to say that beyond UCP, exactly, international standard banking practice. Another example. You receive an LC, issuing bank. If you receive an LC, issuing bank, sorry, not issuing bank, beneficiary or applicant ABC Limited on the LC. On the document, ABC Ltd. The name of the customer, First City Monument Bank Limited. On the document, First City Monument Bank Ltd. You know some people raise discrepancy on that? Use an IABP says LTD is an obvious abbreviation. kg, kilogram, mt, metric ton. All those obvious abbreviations are not what? Discrepancy. You won't find that on UCD. You will find that on International Standard Banking Practice. So, just to document, so ISBP complements UCD from Article 19 to 26. Those are where you find it. Article 18. 18 is on invoice. 19 is multimodal. 20 is bill of lading. From 18 to 26, all those documents. No, to 28, where you have, what's the name? Insurance. All those documents, you need to review them, not just based on Article 14, standard for examination of documents. You should review them in conjunction with what? International Standard Banking Practice. International Standard Banking Practice. The last one, strict compliance. Strict compliance. Strict compliance. Strict compliance basically says that you must cross your T's and dot your I's. You must cross your T's and dot your I's. If you don't cross your T's and dot your I's, it's discrepancy. If you have to ship January 1, the date of shipment, January 31st, bill of lading shows February 1. It is what? Discrepancy. Even though it's 1 day. Even though it's 1 day. And guess what? That would be a reason for not paying. That would be a reason for not paying. 1 day. Strict compliance. Strict compliance. Why? Because the buyer have even though some of those expectations can be waived, which is why the rule allows you to go and what? Waive discrepancy. But you will have first of all rejected it first. And then discrepancy is waived by the customer. You will now amend. The challenge in our sector is because of this waiving of discrepancy, it doesn't make people on LCS to be a good document examiner. Because some customer will give you auto waive ahead.
Yes.
Auto waive ahead. Waive it. Global waiver, I like that. Global waiver. Global waiver. But you know you can't waive regulatory discrepancies anyway. But the fact that there is a global waiver means that's a good one. Fast. You quickly remove the document so you can focus on the other document. Have you noticed also? There's some customer when you see their document, you are happy because you know it's supposed to. Yes. But when you see some, you know there will be issue.
Watch out for the next part of this training on our YouTube channels, Voice of African Trade or Global Trade College.